Well, ladies and gentlemen, my name is Greg Michalowski for ForexLive.com, and this is the midday technical analysis, 6 currency pairs in 6 minutes. So let's get going. Take a look at the euro versus US dollar. We fell below this trend line in trading here today. That level came in around the 128.16-17 level. It's now risk on the top side. We want to stay below that level, and that also allows us to stay below the low that we saw for earlier in the week. So this is our risk level now for the pair. We are breaking to the downside, continuing the trend that we've seen over the last week or so of trading. Take a look at the weekly chart. We did come down to a key support area around the 127.86 level. I should say this is a key target area for the euro versus US dollar. Represents a 61.8% retracement of this move to the upside. Stay below that level keeps the bears even more in control. Let's watch the 46 and 56 level as support targets in trading here today. I would think that the market would have buyers down in that near that level for trading here today if it should get down to that area. Let's take a look at the pound versus US dollar next. This is the hourly chart, and one of the patterns that we've seen over the last 3 days is found against the 100-hour moving average and then against this trend line. And let's add the 200-hour moving average as well. We fell below the 100-hour moving average here, moved back above it, and then all these bars where we found support. In yesterday's trade, we fell below the 100-hour moving average, went right down to our bottom side trend line, bounced up an hour later, and stayed above it through here. In today's trading, we came down to the 100-hour moving average, bounced up to where we have a ceiling here at the 164.14 area. We fell back below the 100-hour moving average, however, and that led to further selling. Got a little bit below our trend line here, but found support against the 200-hour moving average here. That remains the next target to get below. As long as we stay below the 100-hour moving average, the bias remains to the downside for this pair. Let's take a look at the dollar versus yen next. And again, the 100-hour moving average comes into play. Over the last few days, we've seen movements to the downside, movements to the upside, movements to the downside, and now another movement to the upside here. The 100-hour moving average, every time the market breaks through it, either to the upside or downside, we get some follow through. It just doesn't hold that follow through. We have a nice little trend line on the bottom. We have a trend line on the top. And when we broke above the 100 and the trend line, that gave the A-OK, I guess, for the buyers to ultimately enter in. It was a little touch and go for a moment there, but we are moving up to the next level here at the 108.98 level. Above that level comes the underside of this trend line, which comes in at 109.03, and then we start to look toward this high for the week at 109.17. We need to get above the 109.17 to push higher here in the dollar versus yen in trading this week. Let's move on to the dollar versus Canada. I want to put it on the hourly chart here and show you a parallel channel trend line here. We connect the most recent lows here, put a parallel trend line on the top, and that's when where the market peaked at in trading here today. We did make new year highs. No, I'm corrected. We did make new highs going back to the month of March today, breaking above the September highs that we saw earlier this month. So that's good news, but we are back near those highs from September, and those levels came in at the 109.98. Get back above that level is what we're going to need for the dollar versus Canada if we're going to move higher. So the 110 level resistance now. If we get above that level, don't fight it. The buyers are in control. Look for a move up toward this level. If we can't get above this level, we could see a rotation down, and I wouldn't doubt if we go out and take out these lows at some point in the next 24 hours. Let's take a look at the Aussie versus US dollar. This currency pair, if I put it on the weekly chart, bottomed yesterday in an area that we thought would be a support area. We had lows here at the 88.19 and 21 level, and the market found support against that in yesterday's trading and started to move higher. If we take a look at the hourly chart, we also found support against the bottom side of this trend line, well, just ahead of it. and we started to rotate to the upside. We did run out of steam, however, and now we've put a top trend line in the pair at the 88.85 level. What's really key, I think, for this pair is the 100-hour moving average and this trend line. They're tracking together, as is this other trend line right here. And so this area right here is going to be key resistance for the Aussie versus US dollar. We need to get above that level to prove that the buyers are in control. Finally, let's take a look at the New Zealand versus US dollar. And this pair yesterday fell to new lows in the move to the downside. The corrective move, however, came back up to this low area and these lows right here where we had early buyers against the prior low. We broke through that level in trading yesterday, back up to that level in trading here today. That's if the buyers are going to come in, we need to see the market break above there and then above the 100-hour moving average and ultimately the 200-hour moving average. Look at how many times the market has tested the 200-hour moving average. Tested it here, tested it here, tested it here, here, and again yesterday. Today we're further away from it. Ultimately, if this market's going to go higher in New Zealand, we need to get above that level. My name is Greg Michalowski. That's been 6 charts in 6 minutes. If you like this video and want to see more, click on the subscribe button. Otherwise, also visit us at forexlive.com on a daily basis. Good fortune with your trading. Bye-bye now.